As the world's two largest economies agree to a dramatic scaling back of tariffs, questions arise over whether this 90-day pause marks a real turning point or just another chapter in a long-running standoff. Now, joining us to unpack the implications of this US-China truce is Kamles Kumar, Associate Director of Asia Group Advisors. Now, Kamles, how significant is this US-China tariff rollback in the context of ongoing global economic uncertainties?
The rollback is a clear signal of de-escalation, but it's not a breakthrough. It is a fragile truce. Cutting tariffs for 90 days eases short-term market anxiety and gives supply chains some breathing room, especially for sectors tied to electronics and manufacturing. Specifically, the US will lower tariffs on Chinese imports, while China will reduce its tariffs on US goods from 125% to 10%. This move has impacted global markets, with the US stocks surging and the dollar has also experienced a rise today. But structurally, nothing has changed. While markets react positively to this de-escalation, broader structural issues such as forced technology transfers, discriminatory industry policies, and state subsidies role remains unsolved. It is a tactical pause, not a reset. There is no clarity whether the US will reinstate the Liberation Day tariffs after August.
Yeah, so Kamles, you mentioned that this is a tactical pause. So do you see this 90-day pause as just a temporary political maneuver or the start of a longer-term thaw in US-China relations?
I think it's a strategic pause designed for more optics than outcomes. This 90-day pause appears to be a strategic move by both nations to alleviate immediate economic pressures and demonstrate a willingness to engage in dialogue. Establishing a bilateral mechanism for ongoing discussions suggests a commitment to addressing trade issues more constructively. Trump gets to show he's tough but pragmatic, while China buys time to stabilize investor sentiments. Both sides win politically, but the real test will come after 90 days. But this time is a little different with the announcement of the bilateral economic dialogue mechanism, which both sides say will focus on reforms, market openness, and dispute resolution. That's a step in the right direction, but we'll see if this actually delivers outcomes. Then we might see and early signs of a thaw. But if not, this could just be a prelude to another escalation in the near future.
So what kind of ripple effects can Malaysia and other ASEAN countries expect from the easing of these tensions?
I think there are mainly three big ripple effects across ASEAN and Malaysia. I think firstly, the supply chains will reroute through the region again, benefiting the manufacturers here. The easing of tariffs could accelerate the ongoing realignment of supply chains away, and Malaysia's role as a regional hub for electronics manufacturing, especially in Penang and Johor, could be strengthened as companies reassess risk exposure. Malaysian exporters in like rubber, palm oil, and consumer electronics could also see a modest uptick in orders. Secondly, the investor confidence will tick upwards, and reduced uncertainty drives capital towards emerging markets. The government should capitalize on this by promoting Malaysia as a stable, neutral platform for companies seeking access to both Chinese and Western markets. Thirdly, ASEAN might find this a greater leverage in trade talks, particularly in the light of recent US tariffs that also affects ASEAN exports. Countries like Malaysia can use this to engage with US on equal terms. This includes promoting regional initiatives as we are the ASEAN chair this year, including the ASEAN Digital Economy Framework and bilateral priorities like the Malaysian semiconductor industry. However, these benefits are contingent upon the durability of the current truce. A relapse into trade hostilities could disrupt both positive trends and also reintroduce uncertainties in a regional economic landscape. Malaysia should treat this as a breather, but a call to recalibrate fast.